Monday, April 22nd, market analysis. Stan Ehrlich. Good morning, 9:45 California time, middle of the trading day, traditional hours, and that in California, 6:30 to 1 o'clock in the afternoon. We start out with the stock market indexes always, then go to futures, and sometimes some other good stuff, cycles, sectors, crypto, forex, and so on. Not always, but here we go with the indexes. Well, I've been talking about this market coming down to the middle of December to the middle of January trading range area, which is a support zone for many weeks, several weeks, probably about a month now. So we had on Friday gotten down awfully close. In fact, it appears, just eyeballing it, about 3/4 of the way down from the initial major downside breakout, the yellow line right here. And that was a big down day, classic breakout. And I think it's been down almost every single day since then. Wow. We're ready for a bounce. We got oversold at the middle of last week. And looks like Tuesday, Wednesday, Thursday, and Friday was the most oversold condition. And right now we are up a very modest, a little less than 3 points, or 26 on the E-mini. 3 would be on the spider, give or take a little. And no big deal. It's a doji, an inside trading range day. We don't have any bullish engulfings. We don't have any buy signals. It's just simply bouncing out of a support area that I had drawn in here in advance, and it's doing the job. Now, during the day on Friday, it dropped way below it, but the closing price was at the bottom of the support area. The close is the culmination of all the activity at the end of the day. Enough pressure up, down, whatever. So we're bouncing a little. How much? I think there's a good chance we could bounce this week back up to 51.23. But remember, I'm still in the midst of a downside correction that's going to last approximately a month more and finally get down to my support area. And then we're going to turn into another major longer-term bull move wave up, which will probably challenge the historical highs and make new historical highs for most, or if not all, of the indexes. Except maybe the Russell 2000. Okay. The 15-minute E-mini chart does seem to have a possible little formation. If we can rally some more and start to pop up, then we might get up into that pretty darn good resistance area that I just mentioned on the daily data chart. And that is a stretch of, actually, I think 51.66-ish. Yeah, that's right about there. A little bit lower. Okay, right in here. And I see why. That's fine. Is the most I would expect. In fact, there's a couple of the levels on the way up that it might stop at, but we'll talk about that tomorrow. Spider, the big boy, the parent. Doji, inside trading range day. I'm still expecting it to come down to the trading range for the last half of December, beginning of first 2 weeks of January. And that would be, and I'm talking 477 for weeks now. And we are well on our way, at least half. And this is the short-term chart. Little bottom formation, possibly. Minor rally. We are overbought. We're oversold. And I'm expecting a small bounce, but I'm trying to pick a point at which we want to go short again. QQQs, pretty much the same story. A lot of damage done, but not on a long-term basis, just intermediate. And I'm looking for it to come back down a ways more in the Qs. And here's the short-term chart in the Qs. And again, I'm recognizing the possibility, if not maybe probability, of a small bottom that starting to develop on Friday and into today so far. But it's not not breaking out to the upside. It's no big deal anyway. It'll produce a day or two's worth of modest strength. And then I'm thinking we're coming down again. We have been oversold. That's what happens when you're a little oversold. Next is the NASDAQ futures contract daily chart. And the situation is the same. So I'm really not going to go into this all that much because it's repetitive. Okay, and here's a very detailed 1-minute chart of the NASDAQ. I'm alluding to this low being important and that one at the end of Friday. And then this one here this morning so far. Yeah, it looks good. Crossing this little yellow line probably is going to produce a move up to around the high of the chart. I don't know. I'll do it real quick for you. Bing, and a bit of boom, and grab it. And if we start to move up in the next hour or two or three, 17,700, maybe a little bit higher than that, frankly. Okay, bonds. Oh, and I'm sorry, we got the Russell, which is making and is at the high of the day and a new high above yesterday. That's Friday. But look at how much resistance you've got overhead. This is no surprise. They were bouncing off generally a previous important low right on here. And a short-term rally. I think we probably have another move down, more likely than not. This looks pretty good. I hate doing my research at the same time that I'm talking to you guys, but it's not something. Okay, good. That's a fairly broad area, though. Remember, this is Russell has a different personality than the Q's, Spider, and DIA. Let's go to the Russell short-term chart. And yeah, you can make a case for exhaustion weakness, the rally, but that should have made a new low for the trend if you were going to keep going down even more. For the moment, that didn't happen, and we started to make minor new highs, and we're there right now. So a little bit more of a rally. Bonds, 114.17 at the moment, down a little bit on the day, still hovering around the bottom of this channel. It's also a support area. And we've been oversold for a few days now without making any lower lows. I really don't want a green bullish engulfing ER buy signal, period. I want just a little bit of a plain old everyday move up, a bounce, no major signals. And it might get up to about 117. And then it's going to turn down again, I believe. Again, I'm giving this another few weeks, a month, before we finally turn around and start another major bull move up. 10-year notes, same thing. Don't really have a lot of differences here between the notes at the moment and the bonds. I do want to point out that the double top that the notes had with the minimum downside objective of 108.29, call it 109, was met and fulfilled over a week ago, and we haven't even been back to that spot. So objectives have been reached. Oversold conditions we do have or had in the last few days. And it deserves a bounce, but that's about it as far as I can see. Next, crude. Well, huge rally during the day, but it didn't hold on Friday. A minor new low, but a new low for the last few weeks today. We turned around in major overbought conditions and have slipped off pretty decently so far. We're now back into a little bit of a support area. Kind of a little bit of a no man's land for me. We are almost oversold, so that implies the support is more likely to hold, and we might be beginning a rally here. Can't tell, don't have a real good feel for this. We have natural gas. As you can see, trend continues on the downside. I can't come up with anything particularly bullish here. RSI is really neutral. Trend is your friend. So after maybe a couple more days and maybe a little bit higher, but certainly not much, new lows. Next, gold is now trading below the close of 2 weeks ago at the moment. And in severe overbought conditions, it finally turned around a little bit slower than I expected. But I really do want a closing price below the lows. Whoops. Okay. below the lows of the last 2 weeks or so, that yellow line right there. Closing below that would give me a very solid, we topped out, we're going to go down even more. And then I'm going to be talking about 2217 or even lower than that. And let's see what happens. I'm looking at probably a short-term top in gold and silver has already gone below the lows and probably is going to close well below the lows of the last couple, 3 weeks. And it's leading the way down between the two, gold and silver, and already into a support area, but nowhere near oversold. So it's got more elbow room to the downside. Platinum. We actually had an official ER sell signal on Friday, red right there. And we are down on the day $14 almost. So it's working out very well so far. Most of these signals do occur like this one on the exact high day of a major swing or almost the exact low day for green. That was on the low day green. This high of the wick was on the highest high of the rally. That's perfect. This was real close. That was exceptionally good. This one, I don't like these that much because you've already come down quite a bit and then you finally, just in time, so to speak, get a signal. Nah, it's working. There's money to be made, or is, but we're not too far away from probably getting out of that. And what about high-grade copper? Won't quit. We have a new high for the whole trend. Unbelievable. We are still hovering around 80 at the high of the RSI earlier today. Very, very high, very, very overbought. All the pattern upside objectives have been fulfilled and surpassed now since last Thursday, when it basically got to, and this time closing on last Thursday above the minimum upside objective. So I am expecting it to top out very soon. If we get below Friday's low today, we'll have a bearish red sell signal, ER sell signal, but that doesn't look very likely. We're quite a ways from that. But I do think it's in the process or very close to the high day. Next, soybeans had a buy signal on Friday. And a double bottom formation looks very plausible. The second low in the double bottom is green. That's my buy signal. That green didn't work very well. Very minor profits if you could squeeze a profit out of it. That one was a very modest profit, but worked, period. That was great. That was the bottom of the move. That red one's at the top of the move. This green one is not my favorite spot, but it worked very, very well, etc., etc. This one is in a right spot, right smack dab at a second low of a double bottom formation. Soybeans could be starting something big, but I have to kind of justify it with oil, meal, corn, and wheat to some degree. Let's see what we get. Soybean oil at support, oversold and rallying sharply. So it's coming out of support, and it's a new high for the last 3 to 4 days. Okay. No buy signal in the bottom of oil, except we did have one back on March 1st that turned out to be a really great signal. The important thing here is support. Now, I want to add something else, but it's not going to happen today, that's for sure. This could be a shoulder back in July of 22. This is a big pattern. The head of the formation was about May of 23. And here we have this last week or so, April of 24, the last shoulder low, maybe. I've drawn the neckline in and a major bear trend line. A couple of them, they're about the same price levels. We have to go all the way up there in order just to break out of this bottom formation. And this is actually forming in a very unusual spot. Head and shoulders normally don't form after a market goes up and then starts to go sideways. They're usually at the bottom of a bear trend. Soybean oil. Actually, meal. Sorry about that. Did I skip one? Yeah, that was soybean oil I was just talking about just a moment ago with the head and shoulder bottom. Sorry. So, meal. Major support area, not the same kind of formation, but still could turn into something very bullish. You've got lows that are turning into really good support. We're almost making new highs for quite a bit of time here, but not quite yet. Let's see us close above 346.60, and I'll be a lot more interested in talking bull here, bullish. So, support held. We do have a buy signal smack dab on the damn low day, February 29th. I'm liking this more and more, ever so slowly. Just a second. So, looking for a test of resistance and new highs if we can close above that high. Sorry, pardon me, distracted for a moment. Corn. Same kind of story here. We got the bottom of the market to the exact day, February 26th. It is rallying nicely today, making short-term minor new highs. We have to close above some important highs in the last several weeks, couple of months or so, for bullish breakouts in grains. The next one up is December wheat. I'm sorry, wheat. And we have made this morning, yay, new highs. Now we got to stay there. Right now, we're sitting at exactly the previous high made a couple of weeks ago. I need to see more upside follow through. We bought the bottom of the market with a green ER buy signal, actually twins, back to back, both of them green. At first, the low day, then it made a new low, but turned into another buy signal. And now that is the lowest low. And we have made new highs since our green March 11th got the bottom. Wheat. Cattle gapped up. Now, remember, gaps are almost always closed, so we're probably going to come down this week to 175.80 to close the gap. But in oversold condition, this thing looks like it has turned around very nicely. Expecting a test of the resistance in the yellow band up here. Whether we close the gap first or not, we could get the resistance first and then come down and close the gap. But probably it's going to close the gap first and then go up to the resistance. Hogs, nice rally. We got the top of the market in hogs and an extremely good 3 or 4 days after that profit potential. There's a chance that a bigger, longer-term top could form. But right now, the trend is your friend. No lower lows over time. Higher highs, yes, over time. I'm looking for a test of the top. We'll see what happens here. So now I'm going to go to other charts and show you the New York RBOB, gasoline, unleaded gas, New York Harbor, unleaded gas. Friday, bearish engulfing, ER sell signal, and we're down today. Lower than Friday's lows. So I'm expecting it to drop off significantly more. This support level at 2.6, I think, is going to get broken. We're going to test 2.6296, probably the same day. But the real support doesn't start until the ballpark of around 2.5. That's where we're going. Next, OJ, pennant formation, sideways. Can't decide which way to go, up, down, sideways, whatever. Next, neutral. Coffee. Looks like this topped out finally. An indication that it could have on Friday, but I wasn't very sure about it. And now I'm a lot more convinced because this break is really substantial. Too bad we didn't get a signal. You know, my signals are automated and they're get into and or out of trades automatically. You don't have to do a thing except watch. Next, cocoa. Inside trading range day, overbought conditions, divergence stop potential. Could be topping out. This is kind of what I said on the other chart on Friday. So let's see if it nosedives later today or maybe tomorrow. I need to start closing below 9,946 in order to be a little more convinced that we're going to go all the way down to probably 6,670. Next chart. We've got sugar. It did make lower lows over a substantial number of months, about a year almost. And it was oversold. No surprise when you make new lows over a long period of time like that. We have had a little bit of a bounce, and maybe it could bounce somewhat more, but I do think it's going to make new lows for the trend here very soon, maybe even this week. And cotton, kind of the same thing. We've had some great signals, great formations. The last one was a head and shoulder top in cotton. It worked fabulous. We got all the way down to the minimum downside objective, and I did say minimum. You can keep going down a lot more on these kinds of formations over time. But oversold conditions are causing a minor bounce for the moment. Don't think it's going to go very far, and I do think it's going to make new lows again within 1 to 2 weeks. And we're back to RBOB. You guys have a great profitable trading day. Mañana.